Right, learners, today we're going to look at a cash budget. Now, a cash budget is there to plan for the future, to make sure that we've got enough cash to run our business. Remember, we did ratios before when we looked at liquidity, and we said that liquidity looked at the cash. Now, that's a very similar concept, but the big difference when we're looking at cash budgets is that we're planning for the future. Now, the budget is broken up into three sections. There's the receipt section, what money you're expecting to come in, what money you're expecting to pay out, and then the balancing of this at the end. And in grade 10, that's what you really need to focus on. Anything to do with cash will go into here. Anything that's got nothing to do with cash wouldn't appear in here. Now, in this video clip, I want to just focus on the whole balancing and these missing figures here. Now, you'll see that in February, you are expecting to receive in 26,500, right? You've got your payments here, all payments that you're expecting to pay out. And so those two there give you the surplus or the deficit. In this stage, we received more than we paid out, and so we're going to have a surplus here of 16,705. It's your receipts minus your payments. Now, that is your bank account. That's what the cash you've got. You started at the beginning of the month with a negative. The fact that it's in brackets means it's an overdraft. So you started with a negative balance, but you've received more money this month than you've paid out. And so by the end of the month, 16,705 minus 5,000, because it's a negative, and you've now back to a positive of 11,505. Now, the balance at the end of the month is equal to the balance at the beginning of the next month. Right. Now, number C, you were told that your fee income in February was 17,500, and you were told that they're expecting a 15% increase. So when you work this out there, you've got 17,500. Remember, we always start at 100. So we're going to multiply this by 115%. Or you can take the long way around and find 15% and then do a second step of adding it on. And so that gave you 20,125. Likewise, number D, you were given the salary of a supervisor, and the supervisor gets expecting to get a 12.5% increase. So exactly the same way then, 4,000, but it's going up, so it'll be times 112.5%. And that will give you a figure of 4,500. So very important maths comes over here. You have to be able to increase. So either do it in two steps, find the 12,500 and then add it on, or much quicker if you can start getting into one step. Then the interest on the loan over here. Now this one you've got to look a little bit more carefully. You took out a loan in February here. Here's your 9,000 Rand. If I look here, on the 1st of March, I repaid 600. So if we're looking over here, I had 9,000 and I've paid off 600. So my loan has gone down to 8,400. The interest on the loan, which is what you asked to calculate here, is at 10% per annum. Now please take note that is per annum. And it's payable on the last day of the month. So at the end of the month now, you're going to work out and say, well, during the month, I only had 8,400. Find 10% of that, because that's the interest rate. But because that is for a year, we have to divide it by 12. We want to find out what just 1 month is. And so your interest comes to 70 Rand. Right, and then to end off again, you're going to have to add up your receipts over here, add up to see what you've received, add up all your payments, your total receipts minus your total payments, and F will be the surplus. You've still got a surplus, but it's a lot less this month, month because you didn't get a loan in it during the month. Last month you got in a loan which pushed you from a deficit, a shortfall, back into a surplus, and you had to repay the loan this month. So you still got a shortfall. Your opening balance was 11,505, and so you go into the next month with 13,276. So this bottom bit over here, please, very important. It's just simple adding and subtracting, but you need to know which figures you are adding and subtracting. And then just one other concept that you do often get asked. If you look here at your operating expenses, you can see that your operating expenses did go up. Now, one of the things they might ask you is by how much it went up, which is 35 Rand. But if they ask you to do a percentage, here's the formula. It went up by 35, and the increase is always on the old. You add it onto the old, the first one you had, times 100, and there's your 7%. And that is actually asked you in question 9 of this question. So these are the type of concepts that you start, and calculations that you need to start getting familiar with as you're working through budgets.